Hey everyone, welcome back to today's Explainer. We've got a seriously turbulent market weather report to unpack today. If you've been watching the screens, you know June 1st brought some massive shifts. So we're going to decode exactly what happened by looking straight at the data from Axis Direct's technical outlook and the NSE. My goal here is to make these charts and numbers crystal clear so you know exactly what forces are driving the market right now.
All right, let's jump right in. Look at this close. The Nifty 50 ended the session at 23,547.8, taking a sharp 1.5% dive. If you were watching the tickers, you absolutely felt that gloomy weather rolling in. A drop of this magnitude in a single session isn't just a minor hiccup, folks. It's a major momentum shift that demands our attention.
Here's our roadmap for the Explainer today. First, Nifty's strong bearish turn. Second, Bank Nifty under pressure. Third, decoding the options chain. And finally, the key levels you need to watch.
Okay, part 1. Nifty's strong bearish turn, storm clouds gathering. So looking at the daily technical outlook from Axis Direct, you can clearly see this upsloping channel defined by the parallel blue lines. For a while, the index actually respected that upward path. But then, bam! Look at that massive red drop at the edge that completely rejected the upper bounds and plunged heavily.
Now, as most of you know, that massive red drop forms a sizable bearish candle. Basically, from the opening bell to the close, sellers completely hijacked the session. There was virtually zero pushback from buyers, driving the price way down. When you see this kind of footprint on a daily chart, it's a glaring red flag. But does this drop actually have legs? To figure that out, we have to check the momentum, specifically the RSI, or Relative Strength Index. Think of this as the market speedometer. It measures how fast and hard these price changes are hitting to see if we're overbought or oversold. And right now, Axis Direct is pointing out that Nifty's RSI is diving downward, quoting right below its reference line. The takeaway here is crystal clear. The technical indicators are screaming a strong negative bias. The momentum is matching that massive red candle step for step. So when Axis Direct crunches all this together, the bearish candle, the price action, the negative RSI, they give Nifty a trend score of -5. In their playbook, a -5 literally translates to a strong bearish sentiment. The storm is officially upon us. Just look at where the pain was concentrated. We had a few tech survivors keeping their heads above water, Tech Mahindra up 1.9%, plus HCL Tech and Wipro managing modest gains. But the auto sector, absolutely hammered. Hero MotoCorp dropping 3.4%, Eicher Motors down 3.3%, and Bajaj Auto down 3.2%. These are heavyweights, and they really dragged the whole index down with them.
Moving on to part 2, Bank Nifty under pressure, a localized storm front.
Now, unlike the broader Nifty, the Bank Nifty has been trapped in this downward sloping channel for quite some time now, making lower highs and lower lows. It just paints a persistently bleak picture for the banking sector overall. Factoring in that downward channel and the latest bearish candle, Axis Direct gives Bank Nifty a trend score of -4. Sure, it's slightly less severe than the broader market's -5, but make no mistake, a -4 still firmly categorizes the banking sector as undeniably bearish.
If you want to see just how relentless the selling pressure was, look at the Bank Nifty gainers list. And I'm using gainers with massive air quotes here, because the only survivor was Federal Bank, which sat completely flat at exactly 0.0%. Literally not a single bank turned to profit.
The downward pressure was universal among the big players. Canara Bank fell 2.5%, AU Small Finance Bank down 2%, plus giants like Indocend and HDFC Bank both shedding 1.9%. When massive pillars like HDFC and Axis Bank are bleeding this much, the whole index is going underwater for sure.
All right, part 3, decoding the options chain, tracking the wind patterns. To really decode the options data, we need our anchor point. At the June 1st close, the underlying Nifty value sat at 23,382.60. Keep that exact number in the back of your mind as we look at where traders are actually placing their bets. Because when we look at the most active NSE contracts for the June 2nd expiry, the contrast is staggering. Call premiums, the bets that the market will rise, have absolutely collapsed, losing over 80% of their value at the 23,500 and 23,600 strikes. Meanwhile, put premiums, the downside bets, are surging by triple digits. So, what's the bottom line here? The smart money, the people putting real capital on the line, they're overwhelmingly betting that this storm is going to keep raging. Surging puts, collapsing calls, it confirms incredibly aggressive downside positioning. Basically, nobody is pricing in a sudden, sharp recovery right now. Which brings us to part 4, key levels to watch, your trading survival guide.
According to Access Direct's daily pivots, here is the ultimate line in the sand for Nifty: 23,678. This is your critical, trend-deciding pivot level. Everything about the next trading session completely hinges on how the market reacts around this exact number. Here's the game plan. If Nifty can somehow open and hold above that 23,678 pivot, the report suggests a potential rally hitting resistance ceilings at 23,872, 24,196, or maybe even up to 24,390. But if it stays below 23,678, which, let's be honest, current momentum heavily favors, we're looking at further profit booking down to support floors at 23,354, 23,160, or a really deep dive to 22,836. Now, if you're specifically trading the financial sector, your magic number for the Bank Nifty Index is 54,513. Just like the broader market, this is the make-or-break pivot point dictating the day's momentum for the banks. And here is your Bank Nifty action plan. If it shows strength and pushes above 54,513, it might rally toward 54,910. 55,582, or 55,979. But if it stays trapped in that downward channel below the pivot, watch your support levels like a hawk. It could correct down to 53,842, 53,445, or plummet all the way to 52,774. All right, we've unpacked the charts, the downward momentum, and the massive derivative bets, all pointing to a pretty stormy outlook. But as we all know, the market always has the final say. So I'll leave you with this to think about before the opening bell. With strong bearish signals flashing everywhere, is the market actually going to dig its heels in at these critical pivot levels, or are we just witnessing the very beginning of a much deeper, more painful correction? Keep your eyes on those levels, stay disciplined out there, and thanks for joining me for today's Explainer.